Hey everyone, this video is going out to a couple of my communities, the WAP and the RT group, etc. Because I've seen over the last couple of weeks a few confused comments, because we got traders, we got crypto people, we got business creation, we got mergers and acquisition type people, and someone was a bit confused on like, Siam, what are you doing? Like, what do we focus on? And I just want to talk about wealth generation. I saw a post in the RT group today which basically reminded me to make this video, because it's been on my to-do list for a while. And at the end of the day, it's all about wealth generation, and I don't care how you do it. There is no one single tool that is like the magic bullet. Normally it's a case of using a couple to get you to a certain degree, and then a few more to take you further on. Every tool that you use needs to be somewhat symbiotic in order to get you to your goal, which, let's say, is financial independence. So this is why I always like shudder, and I'm slightly annoyed whenever I hear someone on Facebook or go, right, property is the only way to get rich, or trading is the only way to get rich, or M&A or business. There's no one way to get rich. I think thanks to, you know, Tony Robbins and, you know, a glut of all these mainstream self-help books, I think most people are aware of compounding interest. However, I think they've dumbed it down a lot, because if you read any of the Tony Robbins books, it's like, hey, just put your money in some, you know, low-cost tracker fund for 9,000 years and you'll be a millionaire, and you'll, you know, accept your lot at 7% a year or 5% a year. And the thing is, obviously he's aiming at the, you know, the general populace, I guess. But you guys, you are not the general populace. You guys are special. You're different. Hell, you're in these groups, which means you're actively out there trying to do more. And accepting 5, hell, even 10% per year is like saying, right, the average 100-meter sprint is probably 50 seconds if you include all the women, women, children, the fat people, the old people, the infirm, the disabled. If you take all 7.6 billion people on the planet and found out their average time for 100 meters, it'll be like a minute. So that's like saying, yeah, in life, I'm going to aim for 10% per year, which is the average good ROI. And it's bollocks. It's absolute horse shit. When you're starting out, if you do things, I guess, correctly, and if you're using the right tools at the right time, i.e. the right tools for the boat that you are, then in the early days you should be doubling your personal net worth every freaking year. I've doubled my personal net worth every year for at least 5 years in a row now. But then when you start getting to a certain level, you'll find that you can't double anymore. When you're starting to move, you know, 7 figures around, like, it's hard to find things where you can just double your money with 7 figures. And so you'll find that rate of doubling decreases, and then you're going to have to settle for 50% or 25%, etc. And so all you're trying to do, I'm just trying to use compounding interest, because I've got a target where I want to go to, and I've got a relatively new target which I haven't really shared with anyone, and now is not the right video. But I've got this target which I'm going to hit in 20 years. I'm pretty damn sure I'm going to hit this target in 20 years. All I'm doing is I'm doing things where I can basically jump up that curve. Imagine, you know, compounding interest. It's doing bugger all for a long time, then boom. I mean, it took 53 years for Warren Buffett to become a billionaire, I think. Off the top of my head, I need to fact check that. You need to be doing things in the early days so you can basically jump up that yield curve, or that compounding interest of wealth, personal net worth curve, as fast as possible, and focus on your doubling speed, because you're always 6 doubles away from, you know, 100%, or 7 doubles away from 100%, whatever that may be for you. And so in the early days, you need to focus on cash flowing assets and be ruthless with that. And when I say cash flowing assets, not stupid things that yield 5%, 10% yield, at the minimum 25%. And so really, when you're looking at everything, you know, what is cash flowing that gives you more than 25% per year? The only single thing really out there is definitely not property. You can't find me a house that will yield 25-50% per year. It doesn't happen. Or commercial property, it doesn't happen. And if it does, it's going to be up in the big boy leagues. At the moment, you got your, like, pajamas on. So business is the only way. So setting up, running, growing, and selling a business, and do the 5 to 9 game. The set up, run, grow, and sell a business for 5 figures, then 6 figures, 8, 9, etc. And then that is the way that you can really, really start climbing up that compounding interest graph. But then what you'll find is your businesses start to tail off. So one of my businesses doesn't do 100% per year anymore. It does probably 50% growth per year. But that's cool. I'm happy with that. The amount of money coming in is way more than it's ever been, but the rate of growth has diminished. A bit like with cryptos. Cryptos are not going to grow 4,000% per year in global market cap anymore. But the amount of capital that's going to flow in will be a lot more than it's ever had. In the future, you'll see like 1 month, you'll probably see like $1 trillion coming in the space of a month, which is more than cryptos has ever had. I'm not saying that's 2019, but it won't be far off. What I do, so business, I use business for my cash flow, like cash flowing. So I live my lifestyle through that. And then all I do is I siphon off profits into the trading. So my trading, so I made actually more money from trading it on the market than I have with business. But the thing is, trading itself is not going to make you rich, which I think the internet has conned a lot of people. Let's say you start trading with £10,000 and you get yourself to the point where you're doing pretty good, but you're making 15% per year from active trading. Well, after 30 years, you're not going of 15% a year from 10 grand. You're not going to have a life-changing amount. It's not going to be in the millions. So what you need to do is just carry on bumping that up. So when you're doing the 5 to 9 game and you're selling businesses and you come into a liquidity event, and then you can then just bung 5, 6, 7 figures into your account. So all of a sudden your 1 minute, 5 minutes of trading per day, which is giving you say 10% per year, is now a very good ROTI, return on time invested. So trading is very, very good. Again, a lot of people ask me, why not property? Well, property really, it's not real cash flow. I mean, yes, you can make big cash flow from buy to let or whatever, but you need to scale it. The only way to get real cash flow, real income from property, is you need to scale. You need to either do some big, hairy, scary developments, commercial or residential, or you need shitloads of little ones. I've got a friend that owns 50 residential homes and he doesn't actually make that much yield. Or he makes a piss pot yield, but not actually that much in terms of how many thousands he brings in. So, and he's very open about that. He wants to exit, he wants to sell all of his 50 houses, but he can't, he's stuck. So again, I don't like assets where you're just stuck. Business is the most illiquid asset, property is probably the second most illiquid asset. So everything has their pros and cons, and so trading is great once you have capital, but that doesn't mean you should only look at trading in 5 years time when you have capital. You need to do it now, so in 5 years time when you come into the capital, you know exactly what to do with it. Or you can use it as, a random, I guess, market crash profiting tool. At least once a decade we have a global turmoil on some asset class, whether it's stocks, property or commodities of some sort. So if you know how to trade, you can quickly load up a trading account, call it a testing account, and then capitalize on that. That's what I'm doing. And in terms of mergers and acquisitions, M&A or what I call it, Metra's mergers, acquisitions and exits, MMAE, is I guess the next level. Once you start getting into business and you're chucking out tens of thousands of profits per month or whatnot, or hell, if you have a business between 250k to 5 mil a year turnover, then you need to start looking at mergers and acquisitions, because that's the way that you can really then scale your business, because growing a business organically is linear growth. The only way to really do sort of exponential growth is basically buying a business. Like with the stroke of a pen, you can double the size of your business overnight. And growing via acquisition is key, but don't let that scare you. Again, do the thing that is relevant to the boat that you are. I want to be like on the same level as Elon Musk, but if I was to set up a rocket company today, I would actually be hurting myself more than doing any good. I would be spinning my little tiny wheels in the mud. So you have to work up. People go from, I get this all the time, people go from no business ever, zero business experience, and they say, hey Simon, I've got this really good business idea, it's going to make £1 billion profit in year 1, all I need is 100 grand. I'm like, oh, fridge sake, they're going from like, yeah, they're going from not even knowing how to build a toy rocket to let's put something on the moon. I mean, you can do that, but you need shitloads of funding. So that's my little rant. No, it's not really even a rant. I just hopefully it gives you a bit of perspective, and that's just what I'm doing. Yeah, I'll see you soon. Cheers, bye.